CSL, the biggest blood therapy company in the world and the second biggest vaccine company in the globe, reported their financial results for the 2021 financial year. They were mostly pleasing. Profit beat expectations, so too did the dividend. Here's everything you need to know. CSL reported net profit after tax jumped 13% to $2.375 billion. That was 2% more and higher than market expectations. So a tick there. Diving to the detail though, what supported profit growth? Well, CSL's Seqirus division, their flu shot vaccine business, that saw a strong rise in sales, boosting Seqirus division revenue by 30%. On the flip side, what held profits back? Well, CSL's biggest division, their Behring blood therapy business, that remained pretty much constrained. Why? Well, we know blood plasma collections have been severely impacted by COVID-19 restrictions. For example, plasma collections, they're down 20% compared to the same time last year. So this is really hurting CSL's immunoglobulin sales, while the Behring division is also seeing higher costs too. However, stepping back, looking at overall group revenue, that rose 13% to a massive $10.3 billion. CSL's cash flow from operations, also impressive, up almost 50% to $3.6 billion. All in all though, because of this, CSL declared a final dividend of $1.18 per share. That's in US dollars and equivalent to $1.61 Aussie dollars. That dividend is payable on the 30th of September. It goes ex-dividend on the 2nd of September. That means that you'll have to buy CSL shares before then or be holding them to get that $1.61 dividend. All in all, total dividends for the financial year 2021, they increased to $2.22 per share. That's in US dollars and a 10% jump on the same time last year. As for what to expect this year, 2022, well, don't expect profits to improve. CSL says profits will fall to 2.15 to 2.2 billion US dollars. However, CSL does note that demand is still pretty robust for their core plasma products. So that's good news. Secondly, CSL is starting to see a sharp rise in plasma collections, and they've seen this trend from April this year. So that's good news. However, most brokers, including Morgan Stanley, Macquarie, Citi and Credit Suisse, say that CSL is a hold, while UBS and Morgans, they're out on a limb and they've got CSL as a buy. UBS, the most bullish, a $330 target for CSL. So how did the market react today? Well, CSL shares jumped higher to $302.80. That's CSL's highest price since June, but traders quickly took profits and CSL's now trading lower at $294.83, and that's just before 1 p.m. Australian Eastern Standard Time. However, if you look at the technical indicators to back up your decision making, and if you're interested in buying CSL, well, you might like to know CSL shares, they're likely to continue to rally from their July bottom. And that's if you look at the technical indicators as suggested by the 30 and 15 moving day averages, they've flagged a bullish signal. And so too has the MACD, the moving average convergence divergence, both indicating CSL shares could rally over the next few months.